Ever wonder how the really wealthy handle their money? It's often quite different from how most of us invest. It's a whole different playbook.
It really is a completely different approach.
So today we're going to, dive into that contrast. We'll look at private wealth management versus, well, regular personal investing.
Exactly. And our mission here is to really unpack the core differences. We're leaning on a great piece by Kalyani Rajay, Understanding Private Wealth Management and Personal Investing, from September 2024. It lays things out pretty clearly.
Yeah, it's a good guide. We want to pull out the key nuggets for you so you get the picture without getting bogged down in jargon.
Right. Make it accessible.
Okay, so let's kick things off. Private wealth management, or PWM. What's the essence of it?
Okay, so PWM, at its heart, is this really comprehensive suite of financial services. It's designed specifically for high net worth individuals, HNWIs, or their families.
High net worth, so we're talking significant assets here.
Definitely. And it's not just about picking stocks. Think of it more like a financial quarterback, managing the whole game plan for their entire financial life.
The quarterback, I like that analogy. So what's actually in that playbook? What services are included?
Well, typically you've got personalized financial planning. That's the big overview, looking at everything. Then, of course, investment management is key.
Right.
But it goes way beyond that. Estate planning is huge, making sure assets go where they're intended. Tax optimization, which is crucial at higher wealth levels.
Minimizing that tax bite.
Exactly. And often, you'll even find philanthropic advisory services helping clients give effectively.
Wow, okay. So it really sounds like an integrated system, not just separate pieces.
That's the key word,
Yep.
integrated. PWM uses a cohesive strategy. It manages all these different interconnected parts of a client's financial world together.
Strategically?
Strategically, yes, and it's deeply customized, tailored to specific, often very complex needs involving, substantial wealth and intricate financial setups.
Okay, that paints a very clear picture of the PWM world. Now, let's shift gears. How does regular personal investing compare?
Right, personal investing. Well, like the name suggests, this is really where an individual takes the wheel. They make their own investment decisions, develop their own strategies to grow their wealth.
So, managing their own portfolio, essentially.
Pretty much. We're talking about deciding on stocks, bonds, mutual funds, maybe some real estate, the usual suspects.
It sounds more focused then, more on the actual investments themselves?
Yes, the primary focus is definitely on those investment decisions and managing the portfolio. What it usually lacks is that broad, comprehensive financial planning aspect that's so central to PWM.
Got it. So, if we boil it down, the main difference is just how much ground it covers, the scope.
Precisely. The extent and breadth of the services, that's the core distinction. Personal investing is often, more self-directed, maybe with some basic portfolio help.
Do it yourself, maybe with an advisor for the investments part.
Yeah, something like that. Whereas PWM offers that really comprehensive, holistic view. It weaves investment management together with the bigger picture, tax planning, estate planning, the whole nine yards.
And it's specifically built for the complexities that, frankly, come with having a lot of wealth.
Exactly. Tailored for those intricate needs.
Now, the Raj article we're looking at mentions something interesting, how PWM can actually boost business growth for business owners. How does that work?
That's a really relevant point for many listeners. PWM offers strategic investment management, right? But it aligns that strategy with the business owner's long-term goals for their business.
Ah, so the personal wealth strategy supports the business strategy.
Precisely. An optimized personal investment portfolio can actually provide resources or stability to support business objectives. Things like funding and expansion, making an acquisition, or R&D.
So the lines blur a bit in a strategic way.
They can, yes. And beyond just investments, think about the financial planning and risk management side of PWM. That expertise helps protect both personal and business assets from market swings or other unexpected hits.
That kind of stability must be vital for a business owner. Peace of mind.
Absolutely. You don't want personal financial issues derailing the business. And another critical piece the article highlights is succession planning.
Right, planning for the future of the business. Why is that part of PWM?
Well, for many business owners, their business is a huge part of their wealth and legacy. PWM often integrates succession planning to ensure a smooth, well-thought-out transition of ownership and leadership down the road.
So it's about protecting the business's future continuity.
Exactly. It's a strategic approach to wealth transfer that really supports the business long-term.
Okay, so PWM offers some serious advantages for business owners, but what about those who stick with personal investing? What are the benefits for them?
That's important too. Personal investing offers a way for business owners to build wealth completely independently of their business. Diversification is key here.
Spreading the risk.
Right. Spreading investments across stocks, bonds, real estate, whatever it legs, it creates a separate financial cushion. It enhances their overall financial security beyond just the business income.
Sort of like not putting all your eggs in one basket, even if that basket is your own company.
Exactly that. And it lets them pursue personal financial goals too, things maybe not directly tied to the business,
Hmm.
like retirement savings, kids' education funds, an emergency buffer.
That makes sense. Personal goals need personal funding streams.
It provides that crucial financial safety net and the freedom to plan for their personal life.
And isn't there an advantage in terms of accessing the money? Liquidity.
Yes, definitely.
Yeah.
Liquidity and flexibility are big pluses for personal investing. Business assets can be tied up, right? Illiquid.
Yeah. Hard to sell off a piece of machinery quickly if you need cash.
Exactly. Personal investments, especially things like stocks or mutual funds, are often much easier to convert to cash if needed. Or you can adjust your strategy more easily based on market changes or personal needs. That adaptability is valuable.
Okay, good points. Now, risk management. It's crucial everywhere in finance. How does the approach differ between PWM and personal investing?
It differs quite a bit in scope. In
Mhm.
PWM, risk management is it's a very systematic and integrated process. They look at the whole spectrum: inflation risk, credit risk, market volatility, even geopolitical stuff.
Pretty wide lens.
It is. PWM advisors use comprehensive strategies. Diversification, yes, but across asset classes, geography,
Hmm?
they might set up emergency funds, use complex estate planning tools, ensure the right insurance is in place, multiple layers of protection.
Sounds very proactive, very thorough, almost like building financial fortifications.
That's a good way to put it. Now, in personal investing, the focus on risk is generally more about safeguarding the individual investments from big losses.
Protecting the portfolio itself.
Right. Diversification is still super important. Don't be overexposed to one thing. Individual investors might also use tools like stop-loss orders, to automatically sell if a stock drops too much.
Practical tools.
Yeah, and regular portfolio reviews are key, making adjustments as markets shift or your own goals change. And critically, for personal investors, understanding your own tolerance for risk is fundamental. You have to align your choices with what you can stomach.
Absolutely. Knowing yourself as an investor. Okay, let's tackle taxes. Nobody's favorite topic, but essential. How do the tax implications compare?
Taxes are a major focus in PWM. They often employ pretty sophisticated strategies to minimize tax liabilities. It's about careful planning and structuring.
So, not just reacting at tax time, but planning ahead.
Way ahead. This could involve using tax-efficient vehicles like certain types of trusts. Trusts can be complex, but think of them as legal structures that hold assets, and they often come with specific tax advantages, besides helping with estate planning.
Using the structure itself for tax efficiency. Interesting.
Exactly.
Yeah.
PWM advisors might also use techniques like tax loss harvesting, selling losing investments to offset gains elsewhere. And they'll be very deliberate about asset location, putting the right kinds of assets in the right kinds of accounts, like tax-advantaged retirement plans or holding municipal bonds, which are often tax-free.
Very strategic.
Yeah.
And for personal investing.
For personal investing, the focus is more on understanding the basic tax impact on your returns.
Yeah.
You need to be aware of capital gains tax when you sell winners. The rate can depend on how long you held the asset.
Short-term versus long-term gains.
Right. And you pay income tax on things like dividends and bond interest. The common strategies here usually involve maximizing contributions to tax-advantaged accounts.
Like 401k or IRAs.
Exactly. Using those accounts to either defer taxes until you retire, or, in the case of Roth accounts, get tax-free growth. It's more about utilizing the available standard tools effectively.
So PWM is playing a much more complex, proactive tax game. Okay, bringing it all together now. How does PWM specifically help those high net worth clients reach their financial goals, which are often pretty complex themselves?
Well, first off, it provides that highly personalized financial plan we talked about.
Yeah.
It's directly aligned with whatever the client's unique objectives are. Could be retirement lifestyle, funding education, major philanthropy, maybe expanding the business, like we discussed.
Tailored goals need tailored plans.
Absolutely.
Yeah.
And the plan isn't just a document. It's a comprehensive strategy that pulls everything together. Estate planning, investments, tax, risk management, making sure they all work in harmony towards those goals.
The integrated approach again.
Yes. Secondly, PWM delivers high-quality investment management. They build diversified portfolios designed not just for returns, but for returns within the client's specific risk tolerance and time frame. Strategic asset allocation is key for growing and preserving wealth over the long haul.
Managed risk, managed growth.
Precisely. And third, the estate planning piece is vital for legacy goals. PWM facilitates effective wealth transfer, helping clients structure things so assets pass smoothly to heirs or charities. This often involves setting up trusts, planning for taxes, ensuring their wishes are carried out efficiently.
Making sure the wealth serves its intended purpose, even beyond their lifetime.
Exactly.
This has been really illuminating. And, speaking of how things are changing, the article mentioned a fascinating fast fact from an EY study about fintech.
Ah, yes. The growth figures.
Yeah, they're projecting huge growth for fintech adoption, like in the Middle East, jumping from 8% in 2023 to potentially 41% in just 3 years. Asia Pacific up to 26%, Europe 23%.
Oh, globally.
Almost doubling from 9% to
Those
18%.
are striking numbers. It really underscores how technology is reshaping financial services across the board.
It definitely suggests tech will be increasingly important, both for private wealth managers and for individual investors, right?
Hmm.
Offering new tools, maybe new ways to access services.
Absolutely.
Yeah.
It could even start to blur some of the lines between these traditional approaches over time as powerful tools become more widely available. A very dynamic space to watch.
For sure. Okay, so let's try to recap the main points for everyone listening. The fundamental difference between PWM and personal investing really comes down to scope and integration.
Right. PWM is that comprehensive, high-touch, integrated solution for affluent clients,
Yeah.
covering everything from investments to complex planning. Personal investing is generally more self-directed, focused mainly on building and managing an investment portfolio.
And we saw both have real benefits, especially thinking about business owners. PWM offers strategic alignment, risk management, succession planning.
While personal investing provides that independent wealth building, diversification away from the business, and more flexibility and liquidity.
So the key takeaway for you listening in, just understanding these differences, the different philosophies and service levels can really empower you. It helps you think more strategically about your own financial journey, no matter where you are currently.
It definitely clarifies the landscape of what kind of financial support and planning exists.
Which leads to a good question to maybe ponder after this deep dive.
Yeah.
Considering how financial tools are evolving and everything we've talked about today, how might you think about your own financial planning or investment strategy differently now?
That's a great reflective question. Should you be thinking more holistically? Is there a level of comprehensive planning, maybe drawing some inspiration from the PWM approach, even if you're not H&W, that could actually benefit your own situation?
Exactly. Just some food for thought as you map out your financial future. Thanks for diving deep with us today on this.